I don't endorse Robinhood, and I wouldn't take money from them for TFD, primarily because I think that well before all of this happened, this was the case. And I think mostly what Robinhood's model does is encourages that sort of video game perspective of stock trading and encourages obviously individual stock trading. And it really encourages people to look at it like a very short term, game that they're playing. I was literally just reading comments about it today where people were talking about, oh, look at how much I got today, which is not, in my view, a sustainable or healthy way to look at investing. And also individual stock trading is incredibly risky, and the vast majority of us are really not qualified to do it. But even the people who have all the education in the world get it wrong an enormous amount of the time. So it's not something that I really support in terms of its approach to investing in general and what it encourages in people behavior-wise. And obviously for an individual who's looking to use investing to take their savings long-term to a new level, to really take advantage of compound interest, and to set themselves up for a solid retirement, the long and short of what investment really looks like is very boring and very unsexy and very uninteresting. It's just mostly putting money in, usually by automatic deposit, and not looking at it for years and years and years, especially when things are going bad. But it's very strange now the way that this has sort of created an almost like a layer cake situation where like you have the individual traders on Robinhood, many of whom probably don't even have a retirement account, who are just like having some fun trading individual stocks. Then you have the people who are sort of like the middle class investors who are, probably, going super long term with, their 401k and, maybe an ETF or what have you. And then at the top of it, you have Wall Street, who is basically just doing whatever the hell. And obviously for them, the idea of just sort of slowly and quietly playing the market, that's not a sustainable business model for them. It's not a growth model for them. It's not going to it's not going to edge out the competition for them. So you have this sort of multi-layered system where the people at the top are not behaving responsibly and are not operating on good incentives. And I think what you learn from a lot of, these movies and books about things like the 2008 crash is that ultimately it's not really a question of evil people in these organizations. It's a question of bad incentives. It's a question of improper regulation. And so my question is, when I'm thinking about education for our audience, how to get them to think of investing in the right way, how to get them to use it in the right way, how do you make the case to people that things like the Robinhood casino style investing is not a good idea when the so-called, experts at the top are often participating in that same kind of behavior?
Yeah, it's an awesome question. For me, it's just taking a goal-oriented approach to personal finance in general. So many of the things that you just mentioned are just out of one's control, out of your control, my control. You can't control what the hedge funds are doing. You can't control, what your friend is doing over on Robinhood, whether or not they're, turning a $600 stimulus check into $24,000 by trading stocks, right? You can't control any of those things. The only thing you can control is your own behavior and your own actions and how hard you want to work towards your own goals. I've yet to meet a retiree or someone who's met their goal in the time in which they've wanted to meet it and say after achieving it, man, I wish I took more risk and got here sooner. Nobody says that, all right? Nobody says that. If anything, that's a joke, right? The retirees around the bridge table being like, oh, I missed out on buying Airbnb at IPO, ha, 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 ha. Yo, they're chilling. Like they've made it. Like this is their victory lap. So instead of thinking about like, this is the noise. So you're talking about noise. So this was the noisiest 2 weeks I've experienced and, in a long, long time. I mean, this whole thing from just like an insider is a top 5 event. I mean, that's up there with, the recession, oil going negative and all these other things that are like, holy cow. But the interesting thing is like from a client perspective, like my clients weren't calling me about this. Like my mom saw the headline. Like in our echo chamber of finance or financial content and financial media, this was as loud as it gets. Outside of that, Yeah, it was a cool story to put across news. But again, my litmus test is: are my clients calling me? Is there actual interest to buy this stuff? No, they were focused on their lives, their work, their kids, or whatever, and working towards, here it is again, their goals. So that's my advice here. Like, if you want to be a justice warrior and go down to Zuccotti Park again and scream Occupy Wall Street and get a movement going, I get it. I get it. A lot of that frustration from '08, is how that happened here. People are saying we're going to do that again in the wake of, GameStop here. I don't know. I don't see that happening, but I certainly understand the frustration that now exists. But again, my approach would be: what do you want for yourself? What are your goals, and what are you doing to get there? And rolling the dice in a casino or saying I'm going to get to my goals by getting lucky, on a momentum stock or a trend. You said it, like, the risk one has to take to get it right once, let alone multiple times, to actually hit it big in a short period of time. Most people aren't going to want to do that. They're going to want to look at a plan, do the right thing, systematically invest, have something that's achievable, and here's the key word: that's practical. It's got to be pragmatic, right? So goals does it for me.